My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. When a cycle turns, it's a beautiful thing. When a semiconductor cycle turns, it's electric. It can power a whole market, as it did today, with the Dow gaining 391 points, S&P jumping 1.56%, and the Nasdaq pole voting 2.05%. That's a huge move. Keep in mind, aside from the Magnificent Seven, most tech stocks haven't really been doing that well this year. Other than NVIDIA, the semiconductor stocks have been what I call a bear market. Maybe even for ages, thanks to a post-COVID chip glut. See, we had this PC boom during the pandemic, so the chip makers ramped up production, and we're left with too much inventory once the world went back to normal. Because it's not like you need a new computer every year. So the greatest boom became the greatest glut. This morning, though, Taiwan Semi, that's the foundry that makes so many semiconductors, said that business has really picked up. They had a great month. They make so many chips for so many companies that Wall Street concluded that the glut has finally come to an end. And that's what triggered this furious rally in the semis. And because tech stocks tend to trade together, the strength of the semis spread to the Magnificent Seven, even Meta and Alphabet, which are all about advertising. How powerful was this rally? Well, let's take the saga of the trade desk, which was down more than 16% because it saw an October slowdown in online advertising. And they and Google really dominate this business. Now, that decline would normally have crushed Alphabet, Amazon, and Meta. All three were getting pulverized in after-hours trading last night because of the trade desk. Yet today they came roaring back. That's thanks to the resurrection in the semis. Yes, the semiconductor industry can have that much power. Today's move comes after a series of tepid to down Fridays, by the way, at least ever since the beginning of October when Hamas attacked Israel. Now, this move today surprised pretty much everyone. Looked pretty bad when we left last night. And the semiconductor turn was so robust that you have to wonder if it can continue to next week. And for that, we'll have to turn to our game plan. Over the weekend, we have a major event. It's the American Heart Association. It's convening in Philadelphia. And we hear about how this new weight class of drugs that we always hear, the diabetes and obesity drugs, we hear what they may mean for heart disease. The AHA has data from Novo Nordisk, the competitor Lilly. They make Ozempic, and I think can also reignite the stock of Eli Lilly, which makes Mounjaro, and have been hit for the last 2 days. Nobody else has anything similar. Don't believe AstraZeneca when it says it has a pill coming around. That knocked Lilly stock down about $30. Good opportunity. A positive read-through from the AHA bolsters the case that insurers should pay for these expensive self-injected medicines. Next, the small cap stocks helped lead the big ones this week, and that all started when Datadog breathed new life into what's known as the enterprise software stocks. Can it continue? Well, that might be up to a company called Monday.com. It's an Israeli maker of project management software, chiefly for small and medium-sized businesses. We don't know how much of an issue the war in Gaza may be when it comes to their business. But if they blow away the numbers, we could see actually, again, a strong reaction from other leading cloud software companies, including, yes, Salesforce, Adobe, which was really scorched today, and ServiceNow. Look, even consulting company Accenture is starting to do better in this kind of, as someone who recommends these companies. We also get results from a company that's truly fallen by the wayside, and that's Tyson Foods. I think the raw costs have kind of come down for basic beef and poultry, so I bet Tyson could be in better shape on that front, but are they organized enough to profit from it? That's a different story. I don't have a lot of faith in this management team. We start Tuesday with the Consumer Price Index, and we need to see a cooler number if we're going to get fewer speeches like the one we got from Fed Chief Powell yesterday, which still sounded heavily biased toward the need to tighten. That helped make yesterday such an ugly day. I think the CPI might be surprisingly cool, which would be very good news. That is the big number for this week. Home Depot reports, too, and I have to tell you, that comes out around 6 o'clock. I very eagerly anticipate. I think people seem totally clueless about the stock, though. We don't know if high mortgage rates are causing homeowners to remodel because they're reluctant to move, given that they'd end up paying a much higher interest rate on the next house. Plenty of people are worried about shoplifting and big-ticket items, too. But remember, we need to pay attention to Home Depot's forecast more than its results. The former is far more important. Remember, housing is still the worst part of the increase in inflation since the pandemic began. And by the way, it's rents that are in. The actual home is not in the CPI. I've been fascinated with the progress of a company called On Holding. the sneaker company, reports Tuesday. The last quarter had something both for the Bears and the Bulls, while the latter, well, I got to tell you, the Bears are winning. And they're winning because the stock had been, I think, too hot. And some people think they have too much inventory. On holding now is a big short position. It's why guys love the short sneaker companies except Nike, where they've just been burned too many times going against the big guy. Wednesday, we get October retail sales data. I think they will be a little, maybe weak, because we keep reading about how the consumer's getting tapped out. If we're ever going to get an end to this rate cycle, we actually do need to see a weak retail sales number. Before the open, we hear from Target. Oh, man, that has been just a punished stock, much more than the company, I think, merits. I think the negativity now is baked in. But I reiterate that if you want retail exposure here, well, you really only want Amazon, Walmart, Costco, and TJX. Speaking of TJX, the off-price retailer reports also Wednesday morning. I expect a very strong number led by its home goods division. This stock trades the following way. The number comes out, stock spikes really big, then gets hit really hard, and then comes back. I don't know why. It happens every time. We're going to be talking about TJX and Costco, as well as a host of other stocks, when Jeff Marks and I run our investing club meeting next week. You often hear callers say that they love the club. I don't pick the callers, so it's all pretty organic. I recommend you listen in. And if that sounds like shameless self-promotion, so what? I've worked so darn hard. I'm actually working last night on next week's meeting. But self-promotion, when does that ever bother me? After the close, we get results from one of our favorite investing club companies, which is Palo Alto Networks, PNW. This stock's been held back by the poor performance of a company called Fortinet, a lower-quality competitor that reported weaker earnings recently. I think Palo Alto's doing so much better than Fortinet, which is why I see the former headed higher. Otherwise, we wouldn't still own it. Cisco reports, too. Now, this is a huge tech company that's buying Splunk, which is a competitor to Datadog, which I mentioned earlier had a good quarter. Now, I think Cisco's got a lot going for it, but I do prefer Broadcom in the space because it should be able to close on its acquisition of VMware next week. And I'm saying that because the president's going to meet with President Xi on this day, and I have a feeling that maybe you get an olive branch from Xi that will allow these two companies to merge. VMware and Broadcom are just fabulous together. Thursday, Walmart reports, and while it's run a great deal, I think it actually go further because consumers have been shifting their spending to wherever they can get the best bargains, and it's hard to beat the prices at Walmart. One of the hardest stocks to fathom right now in terms of valuation is Macy's. It's so cheap, you know Wall Street clearly expects the company to miss numbers, possibly by a mile. I care more about the next quarter, the forecast, the one we're in right now, because that includes the holiday season where all the money's really made. Still, I want to hear what Macy's has to say about the consumer. And after the close, we hear from a company called Applied Materials, that's also known as AMAT. It's a capital equipment maker. They make this equipment to make semis. It saw its stock soar today, again, thanks to the good news that I mentioned at the top from Taiwan Semi. I've been a huge supporter of Applied Materials. They've been on the show a number of times. And throughout the chip glut, I've said they'll be fine, and now I feel really good about it. Here's the bottom line. This market's had a very solid winning streak of late. Remember that it wouldn't be happening if interest rates were still climbing. As long as rates stay calm, that's the big backdrop that we need. Companies that report good news will be rewarded with higher stock prices. But never forget that the bond market still is in control. It's just that it's finally turned benign, at least for now. Let's go to Dave in Illinois. Dave!
Dr. Cramer, happy Phosphoro Friday.
There you go.
I can't wait for your return to Chicago, my good Matt friend.
Well, thank you, Dave. And I intend to go to Binny's and sign more of my wife's Mezcal Phosphoro, which sells really well at Binny's. Can't beat that, can you? How can I help, Dave?
Jim, 2 weeks ago, this $12 billion market cap Swiss company posted better than expected quarterly results and raised its guidance, popping 13% on the day. Of course, I'm talking about Logitech International. This designer, manufacturer, and marketer of connection devices has already achieved average analyst price targets. So, Jim, amid weaker global demand for new PCs, can LOGI go higher from here?
Well, Dave, first of all, thank you for your kind comments, and you are always a pleasure when you call in. I think Logitech has had such a big move. I mean, this thing just went from 50 to 81. So I tell you, Dave, I think we have to take a little ka-ching when it comes to that stock because it's had such a big run. Thank you for bringing it to our attention. Doug in Florida. Doug!
Hey, Jim, how you doing?
Not bad. How about you, Doug? What's going on?
I'm doing great. I just want to get your take on Lennar stock, ticker LEN.
Okay, normally I would think at this point in the cycle that Lennar's probably had it. But you know what? These companies have become so disciplined, so chary in terms of how much they spend per house, in terms of the cost, that I think Lennar can go still higher. And I think that Stuart Miller's done a remarkable job. I can see that stock going back to all-time highs. Vicky in Virginia. Vicky.
Hi, Jim. How are you?
Good. How about you?
Fine. I'm good, Jim. And I have the question for the American Airlines. What would be the next coming holiday in the end of November and Christmas holiday? What would be the American Airlines stock?
No, you see, I have to tell you, I have made my decision that the one I'm going to support when people call is Delta. I think that Delta's in the best shape. American Airlines has just been, unfortunately, a very well-run company, but the stock has just been a dog. Oops, here we go. I say stick with Delta. Now, as long as interest rates remain calm, companies with good news will get rewarded with higher stock prices. But I want you to keep an eye out on rates because they will impact the game plan far more than any one company will. On Mad Money tonight, crude oil prices have been sliding all month. So what does that mean for an oil and gas producer like club name? Remember, we're going to have a club meeting next week, Coterra Energy, which we'll be talking about at our Wednesday meeting. I'm checking with the CEO after the company reported earnings earlier in the week. Then we're taking some time to honor all those who have served our country for Veterans Day, Mad Money style. I'm sitting down with some vets from the Finance Club at the U.S. Military Academy at West Point to answer some of the burning investing questions. And you're not going to want to miss it. From Warner Brothers Discovery to Disney, we're ranking the major media companies that reported this week because we've heard them all, and I think it's going to shock you. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.